Hey, what's up everybody? It's your mortgage expert, Brian McCauley here. So you're thinking about buying a house in Dallas, Texas, but these high interest rates have you spooked? Stick around. I'm gonna show you in this video why the refinance boom is all the relief that you're gonna need. So we all know the housing market is changing. I think Dallas is in a tremendous spot. So no matter how strange this correction gets, economically, we have so many people and so many businesses that live here and move here that I think any correction that's coming, we're going to be able to absorb it quickly. I think we'll probably see this trend with market corrections for, anywhere for the next 6 to probably 12 months. But what I really want to talk about is two things at this point, right? Number one, people out there that are buying houses that are hesitant to buy because of the interest rate. I want to run some numbers with you guys and I want to show you why buying right now will actually save you money. Okay, so let's use a $500,000 home loan for an example. If you get a $500,000 home loan right now and the interest rate is, let's just call it 6.5%, that's gonna put your monthly mortgage, principal, and interest at about $3,100 a month, okay? But I want you guys to know what I know, which is in 12 to 18 months, there's gonna be a refinance boom. So now let's run a second set of numbers beside that and say, hey, if I get a $500,000 mortgage at 6.5 and the payment's $3,100, when the refinance boom hits and interest rates drop back to maybe 4.5%, that's gonna take your payment down $600 less. So that's a lot of savings, and I understand that people don't necessarily wanna pay that higher rate and that payment up front, but it's for a short period of time, maybe 12 to 18 months at the most, so you have to think, all right, if I've gotta pay an extra $600 a month for 12 months, that's $7,200, but I don't have to overpay for the house. I get the house that I want. I can probably even get some closing costs into the deal and save some money out of pocket on that. So there are a lot of great things for buyers right now as long as they know how to see the market. That's part one. Part two I want to talk about is what is going to happen when buyers just wait for interest rates to drop. So there was an article that came out in late August that said Fannie Mae projected that interest rates will probably get back down to 4.5, maybe a little bit lower by the end of 2023. So what a lot of buyers are doing, they're saying, hey, interest rates are a little too high, my payment's a little too expensive. What I'm going to do is just hang tight, Brian, until those interest rates drop again. Then I'm going to go out, secure a property, and get obviously a cheaper home loan. And that is a good thought in theory, but let me tell you, you're not the only one with that idea. You're gonna have this mad dash of all the potential home buyers come off the sidelines at one time, and they're gonna go try to find properties. And probably within the first 30 to 45 days, everybody's gonna secure a property and all the inventory is gonna be gone, and we're gonna be right back where we started in the COVID era, which is there's not enough homes for every individual, so there's going to become a shortage again, and then everybody's gonna be overbidding on the property, paying an additional $20,000, $30,000, $40,000 just to secure the house. So if you gotta pay an extra 6, 7, 8 grand for a year in payments, it's still much, much cheaper than getting a lower interest rate and a lower payment, but overpaying on the house by 30, 40, 50 grand. So now would be the time to buy, get a deal on a house, get some closing costs, save a lot of out-of-pocket money, have that mortgage for a while, and then refinance when the refinance boom hits, because it's not a matter of if it's going to happen, it's just a matter of when. I would say best case scenario 9 to 12 months. Again, worst case scenario 15 to 18, but it's definitely going to happen. So last point I want to talk about when I'm talking to clients now that are actually excited about buying houses and they don't love the fact that they're getting a 6.5 interest rate. We go through a future refinance strategy on my contract call with all clients to talk about the payments, but also how a refinance looks. So I want to spend a couple minutes talking about refis, how they work, so everybody's crystal clear that if you are planning on buying a house now and waiting on the refi boom, when that happens, capitalize on the rates and lowering the payment and improving the financial position. But I want you to be prepared for the process, and I also want you to be prepared for the cost. So number one, when you go through a refinance, it is a fully qualifying transaction. What does that mean? You have to update your credit at that time. We have to update your income. Most likely we have to get a new appraisal. So it's a fully qualifying transaction. So if interest rates get lower in the future, you will have to reestablish credit, make sure your income is good, assets are good, everything else needs to be the same as it is on a purchase or better, because obviously the lender still has to make sure that you, the borrower, are okay and everything's going to perform. So it's a fully qualifying transaction. It takes about 30 days to close. Second piece people always ask is, are there closing costs associated with a refinance? The short answer is yes. Refinances, because they're fully qualifying home loans, they have to do all the paperwork and we have to do all the paperwork again. So there's cost associated with the services. Now, the costs are a little bit less than a purchase, probably about 75% of the cost. The second good thing about it on a refinance is there's no out-of-pocket expense. You as the home buyer gets to roll all of the closing costs into the transaction. So if you owe $500,000 on the loan, and let's say you refinance and the closing costs are $8,000, now you'd be financing $508,000 versus $500,000. Now I know people say, well, $8,000, that's really expensive. I don't want to, eat up my equity or waste a lot of money on the cost. Well, yes, you get to roll the closing costs into the transaction, so let's call it $8,000. But the benefit of a refinance is that you get to skip 2 payments. So let's say your payments are $3,000 a month. Well, if you get to skip 2 payments, that's $3,000 a month, so that's $6,000 total that you get to keep in your pocket. So if the cost of the refinance is $8 and the savings that you get on the 2 skip months is $6, it actually only costs you $2,000 on the net to refinance. Now, if I'm dropping down from 6.5 to 4.5 and it's lowering my payment by $600, what you want to do is take the $2,000 that it's actually costing you to refinance, divide it by the $600 that it's saving you in the monthly payments, and that'll give you a break-even point. In this scenario, it's about 3.5 months. So the logic is that if you're going to be in the house longer than the break-even point, in this scenario 4 months, you want to do the refinance because obviously everything after the break-even point, you have made up all your money and you start picking up whatever the savings is, $600 in this scenario each month. So refinances are great. They're all about the benefit to the consumer. Another refinance boom is going to happen. I don't know if it's going to be end of 23 or 24, but it will happen. So make sure and don't let these high interest rates keep you from buying a house, because it's going to be a short-term play. You'll get financial relief when the refinance boom happens. You'll lower your rate in payment and you'll be happily secured in your property. So listen, hopefully you found this video useful. If you did, do me a favor, like, subscribe, share with somebody that you know that needs this information. If you got a comment about this video, go ahead and drop it below and myself or my team will promise to get back to you. And if you just want to set up a consultation, have a conversation around your financial future, talks about housing, do us a favor, call us, email us, text us. We're always here for you. Until next time, stay tuned.